Okay, so this is still recorded, so you can review it afterwards. Okay, so I'm just borrowing some of the PowerPoints in the internet. However, the concepts are similar. Okay, so our first objective this morning is to understand why organizations budget and the processes they use to create budgets. So basic framework. So we need budget is a detailed quantitative plan for acquiring and using financial and other resources over a specified forthcoming time period. So you are now planning how to use your financial resources to the different activities in the organization. So so take note, a budget is a plan. Okay, so usually budgets are also being used to measure and evaluate the performance of the management at the end to determine whether they have achieved or attained their goals for the entire year. So the act of preparing a budget at the is called budgeting. So the use of budgets to control an organization's activities is known as budgetary control. So ang twin purpose sa budget is not only to plan how to use your resources, but also to control activities. Okay, so that you will not go over budget. Okay, so that you will not need as much as possible to borrow money for activities that are not in line with the goals of the organization. Okay, so what is the difference between planning and control? So in planning, it involves developing objectives and preparing various budgets to achieve those objectives. So basically, the budget is planning how to use your money to achieve your objectives. And control, so these are steps taken by management to increase the likelihood that the objectives set uh, set down while planning are attained, and that all parts of the organization are working toward together toward that goal. So I have mentioned in the past, so the purpose of the management and employees in the organization is to attain the vision and mission. So one way of doing that or making sure that it will happen is to create budgets so that we can match our resources to our activities. So what are the different advantages when we do the budgeting? So in budgeting, we will be able to really define what are our goals and objectives and how to achieve those. Another advantage is you will think about and plan for the future. Third, it is a means of allocating resources, uncover potential bottlenecks. So you will be able to know what are the limitations in the productions and uh, operations, coordinate activities within different offices or different departments, and lastly, you will be able to communicate your plans to your lower level managers and middle level managers. Okay, so the essence of budgeting is not only limited to private entities, but even government, okay, agencies, and even at the national government and personal individuals are uh, doing this. So in connection with the budgeting, so we also need to understand the concept of responsibility accounting. So in responsibility accounting, the managers should only be held responsible for items that they can control. Okay, so we should only reward the management based on the budget that they can control, or the income or cost that they can control, and then learn from the deviations or the variances from their plans, and learn from feedback. Okay, so because there are items in their budget that are simply allocated to their department. Okay, so for example, the electricity cost for the entire organization, and you do not have a separate meter for all the offices. So instead, you divided the total electricity cost kung pila ka department ang naa sa inyohang offices. But you do not know whether this office consumes more or consumes less of the electricity. So, so if this item is not controlled, or uh, are not measured accurately for that department, so it should not be used uh, to punish or reward the management. Another example of expense that maybe walay control ang management is the advertising cost. Okay? So the advertising cost benefits, let's say, all the branches. So kung mag-advertise si Jollibee, so um, of course these are negotiations from the top, so from the headquarter to advertising agency. However, the cost and the expenses of the advertising are allocated to the different branches or the different franchises because they can benefit from their advertising. But advertising is dili na siya, wa na siya appeal sa plano sa different nga mga franchise owners. So these are example of the cost that they cannot control. So this should not be part of the cost or expense um, that evaluates the performance of the different managers and different department managers. So choosing the budget period. So usually organizations prepare an annual budget period. Okay, so before the start of the fiscal year or the natural business year, so organizations conduct series of budget hearings or budgeting plans, and then consolidate all those plans so they can come up with a company annual budget. So operating budgets covers 1 year, and usually companies divide their annual budget into 4 quarters. Okay, so quarterly. So we also have a continuous budget. So it is a 12-month budget that rolls forward one month or even quarter as the current month or quarter is completed. So for example, you are preparing budget for January to December. So permintig yun na 12 months. So if pag mahuman na ang January, so mag-start na po ang imong budget sa February to the ang end niya is not on December, but so pag human sa February, so March to February the next year. So as long as 12 months gihapon. So it's called continuous budget. So usually the ideal type of budgeting is the self-imposed budget, or also known as the participative budget. So it is a budget that is prepared with full cooperation and participation of managers at all levels. So the budgeting starts from asking information or asking the budget from the lower level managers, and then supervised, overseen by the middle management, and then reviewed by the top management. So what are the different advantages of self-imposed budgets? So the first advantage is individuals at all levels of the organization are viewed as members of the team. Okay, so it increases participation from all individuals in the organization whose judgments are valued by top management. Second, budget estimates prepared by the frontline managers, so those who are serving our customers or clients, are often more accurate. Okay, so mas correct or mas duol ta sa actual picture than estimates prepared by the top managers. Third advantage of the self-imposed budget, so motivation is generally higher. So if ang individuals mag-participate in setting their own goals, so they are motivated more compared to goals that are imposed from the top management. So usually individuals don't like to be uh, ordered around or bossed around. So if they are the ones setting their own goals, so the motivation to achieve those goals are generally higher. The fourth advantage is a manager who is not able to meet a budget imposed, especially from the top management, can claim that it was unrealistic. So if ang top management ang mag-impose ng a budget and then they could not meet the goals or the budget goals, then they can have an excuse that it was unrealistic. So doing the self-imposed budgets can eliminate this type of excuse because they're the ones setting the goals. However, the disadvantage of the self-imposed budget uh, is it increases the what we call the budgetary slack. So kana bitang you underestimate your underestimate your income or your sales quota, and then you overestimate your expenses para ma-achieve yun ang ma-achieve ang nasa budget or malabuan pa ang nasa budget. Especially if the budgets are being used to punish or reward the managers. So they have the high probability to do the uh, budgetary slack. So one way of preventing the budgetary slack is to have the budget reviewed by the top management. However, the best way to remove the budgetary slack is not to use the budget to punish the managers. So it should only be used as a learning tool. So for the next coming years. So for example, in the marketing department, so if they're the ones imposing the budget, so they can probably uh, put a sales quota nga kaya ra kayo nila abton, okay? Instead of achieving a higher sales target. So the success of a budget program depends on the three human factors. Okay, so first, the top management must be enthusiastic and committed to the budget process. So the management knows the importance of the budgeting and is committed to do this regularly. Second, the top management must not use the budget to pressure the employees or probably blame them when something goes wrong. So the budgets are estimates and forecasts. So as we know, estimates and forecasts have a high chance that dili na siya mao ang nasa uh, actual. Okay, because there are things that we could not foresee. So it's not right or appropriate for the management to use it if the employees could not attain their budget. So instead of pressuring or blaming them, so we can learn from the experience and how to improve better our budget estimates. A third, highly achievable budget targets are usually preferred when managers are rewarded based on meeting budget targets. Okay, so if you want your managers to achieve a higher target, then the budgets must also be um, increased. Okay, so prepare a budget that is sakto lang, dili kayo sayon i-achieve, dili pud siya lisod i-achieve. Okay, so overview of the master budget. So in a master budgets, there are different sub budgets. So we can prepare the overall budget without preparing um, any of this. Okay, so this is an example for a manufacturing. So of course, for you to be able to do other budgets, so you have to create first the sales budget and how many units to produce or how many service to perform this year. So after creating the sales budget, so you can prepare a production budget. So how many units to produce this year. So importante kayo ni silang duha nga magtukma or at least maduol-duol because if dagan kayo ang sales demand and then we are not prepared to produce the required units, the demanded units, then it will lead to a loss of customer. Okay, possible loss of possible customer. Okay, so this happened. So actual nga nahitabuan ni nga grabe ang marketing nila, grabe ang advertising nila. However, they did not consider unsay limitation sa ilang production. So daghay nagdemand, daghay nag-order. Unfortunately, the production could not accommodate all those orders. So it lead to customer loss. So so in creating the sales budget, so you have to coordinate also with the production budget as to how many units they can the max they can produce or the maximum units nga they can produce. So upon creation of the production budget, so you will be able to determine the raw materials needed to purchase, the labor hours needed, and also to determine whether sakto ba ang tao or we need to hire more. Manufacturing overhead budget, so expenses that are not included in the direct materials and direct labor. So aside from the production budget, so the sales budget can be a reference to create the selling and administrative budget. The production budget can be used to identify our ending inventory. So importante sad na nga we know our ending inventory because we need to store. Okay? So naaman tayo ginatawag na storage cost, okay, and ordering cost. So after creating all of this, so sa cash budget, so ang kailangan niya are the cash collections and the possible cash disbursements. And also, if dili kaya sa cash collections this year, then that's the time that the management or the company needs to borrow money. Okay? So kung dili kaya sa cash collections to fund or to spend to come up with the money needed para uh, mas ma-fund ang kaninga mga expenses. So that's the time that they will need to borrow money and also to estimate kung kano sa sila makabayad sa uh, money or sa borrowed money. So after that, you can possibly create a budgeted income statement and lastly, the budgeted balance sheet. So seeing the big picture. So we need to prepare for this manufacturing entity. We need to prepare 10 schedules. So the questions, how much sales revenue will we earn? How much cash will we collect from customers? Third, how much raw materials will we need to purchase? Fourth is how much manufacturing cost will we incur? Five is how much cash will we pay to our suppliers and our direct labors? And how much cash will we pay for manufacturing overhead resources? What is the total cost from finished goods to cost of goods sold? How much selling and administrative expense? How much money will we borrow or repay? How much operating income? And what will our balance sheet look like at the end of the budget period? So these are the questions that we need to answer in preparing the different budgets. So in creating the budget, so we need to have some estimates or assumptions. So for example, what are the budgeted unit sales? What is the selling price per unit? And what percentage of accounts receivable will be collected in the current and subsequent periods? So it's important. So ang first thing abuhaton when we create the budget is to create assumptions or estimates based on our mga historical financial statements. So usually we use the Excel to create a master budget. So it's very handy sa pag-create because it allows you to uh, come up with the different scenarios. So, so welcome to our second objective. So prepare the sales budget, including a schedule of expected cash collections. So these are the following assumptions so that we can create a sales budget. So your Royal Company is preparing budgets for the quarter ending June 30th. So ang atong budget nga himuon is only good for a quarter. Okay, so the budgeted sales for the next 5 months are the following. So 20,000 units, 50,000 units, 30, 25, and 15. So selling price for each unit is 10. So since we are only preparing for the quarter, so that will start from April to and will end sa June. So we will only use 20, 50, 30, 20, 50, and 30. Okay, so based on the assumption, so 20,000 units, 50,000 units, and 30,000 units. So in a quarter, you will sell 100,000 units. Each of the units are 10 pesos or the selling price. So expected budgeted sales for April is 200,000, May is 500, June is 300. So for the whole quarter, so you are expecting to have 1 million nga sales. Okay, so mo ni siya. Okay. So you just multiply the 20,000. So ang imong formula dira is multiply 20,000 the budget sales in units times 10, the selling price. So this is the expected cash collection. So based on their past experience, so these are the following pattern. So all sales are on account. And then the collection pattern is that Usually they can collect the sales, the 70% of the sales for that month. Uh, so if you have 200,000 sales for April, so you are expected to collect only 70% in that month, while the 25% will be collected the following month. So sa May na ang 25%. And based on experience, usually 5% is uncollectible. So also in April, so the March 31st accounts receivable balance of 30,000 will be collected in full. So you will collect 30,000 in April. So so this is how the Excel will look like. So as you can see, so ang March 31 niya sales, I mean accounts receivable will be collected in April. So it is a cash collection in April. So 70% of as we have computed gaina, so the April sales is 200,000. So 70% of that will be collected in this month. 25% will be collected the next month. Sa May sales, so you have 500,000. 70% will be collected this month, while 25% is collected in June. So to answer this, so let's go back to our sales budget. So simply multiply 200,000 by 70%. Okay, so if you sum it up, so total collections for April is 170, for May is 400,000, for June is 335,000. So in the quarter, so you expect to collect around 905,000 cash collections. So the answer for this item, the answer is 905,000. So the total cash collection first for the entire quarter. Okay, so pag na create ang sales budget, then you can now proceed to the production budget. So how many units to produce? So na kay forecast nga sales. So based on that, so you can now determine the production. So these are the assumptions for the production. So the management at Royal Company wants ending inventory equal to 20% of the following month's budgeted sales in units. So the ending inventory is equal to 20% of the next month or the following month's budgeted sales in units. On March 31st, so 4,000 units were on hand. So that's your beginning inventory. Okay, so let's go to the production budget. So ang budgeted sales, of course, makita nimo sa sales budget. So how many units to produce? So you have for April, that's 20,000. So for May, 50,000. And for the whole quarter is 100,000. So the desired ending inventory, so i-add nimo. So to get the desired ending inventory, so see this formula, that's 20% multiplied by the next budgeted sales. So kaning 10,000 gikuha ni by multiplying 20% of 50,000. And then the for May, so that's 20% of 30,000. Now this 5,000 is an assumed ending inventory. Okay, so assumed lang ni siya nga ending inventory. So we have 25,000 units for July, if you can recall. So 20% of that is 5,000. So you have total needs for April, that's 30,000. So they have to produce 30,000 sa April, 56,000 in May, and 35,000 units in June. Now the beginning inventory, so according to the assumption, the March inventory or the ending inventory of March is 4,000. So for April, it is our beginning inventory. For May, so we get that. So the ending inventory of April will become the beginning inventory of May. Same with June. So ending inventory of May is the ending inventory of, is the beginning inventory of June. Okay, so deduct the beginning inventory. So you will need to produce 26,000 for April, 46,000 for May, and 29,000 for June. Now, be careful kay usually diri ra ba masayop. So the total budgeted sales for the quarter is 100,000, pero ang pagkuha sa ending inventory, so usually ang uban gina-add nila from April, May ug June. So that's wrong because ang dapat ra i-consider nimo nga ending inventory is ang ending inventory sa June. So the ending inventory for the entire quarter. So i-add na. So you have total needs of 105. Take note that the beginning inventory, so dili pud nimo na siya i-add tanan. You only choose ang pinaka-beginning yun niya inventory sa quarter, which is 4,000. So mo ni atong butang diri. So required production for the entire quarter is 101,000. Right? So that's how the Excel would look like. So what is the required production in May? So we have 46,000. Okay, so you have already prepared the sales budget and the production budget. So it is time to create now the manufacturing budgets. So you have the direct materials and a schedule of cash disbursements. You can also prepare the direct labor and manufacturing overhead. So let's start with the direct materials. So these are the following assumptions in creating the direct materials budget. So at Royal Company, so you will need 5 pounds of material to produce 1 unit of the product. So 5 pounds of raw materials to produce 1 unit of the product. Management wants materials on hand at the end of each month equal to 10% of the following month. So 10% of the succeeding month's production. And on March 31, 13,000 pounds of material are on hand. So this is the ending inventory for March 31, which will become our beginning inventory for April. Material cost for each pound is 0.40. So let's create the direct materials budget. Right, so actually it's already So remember we have 26,000. So we get that info from our production budget. So it is the required production this quarter. So 26, 46, and 29. And you will need 5 raw materials of 5 pounds per unit. So multiply that by 5. So you will have 130,000 for April. May is 230. For June is 145. Now for the desired ending inventory. So according to the assumption, so 10% of the next month's production needs. So 10%, so that's why we multiply 10% sa May nga production needs, 230,000. And then for May is 14,500. For June, it is the assumed desired ending inventory. Okay, so 11,500. So i-add ang desired ending inventory. So you have a total raw materials needed, 153, 244, and 156.5. Less beginning inventory. So it's sa March this year, so 13,000. So the ending inventory of the previous month becomes the beginning inventory of the succeeding month. So ending inventory sa 23 sa April is 23. So for me it's the beginning inventory, while for June it's 14,500. So taken from the ending inventory of May. So now you can calculate the materials to be purchased. So 140, 221.5, and 142,000. For the quarter is 503,500. Okay. So question, how much materials should be purchased in May? So this is our May. So you need to purchase 221,500. Okay, so let's move to the cash disbursement. So for materials, so you will pay 0.40 per pound of its materials. So that's the cost per pound of materials needed. One half of the month's purchases is paid on that month, while the other half or the 50% is paid the following month. March 31 accounts payable balance is 12,000. So you will pay that this in April. So let's go to the schedule of cash disbursement for materials. So you have a March 31 accounts payable, 12,000 to be paid this month, this April. You are also able to determine, okay? So materials needed to purchase is 140, 221, and 142, but the cost per unit is only 40 cents. So to get the total cost to purchase those units, so simply multiply the materials to be purchased by 40%. Okay, so 40%. So that's how we get the formula. So for April, that's 56,000. For May is 88,600. For June is 56,800. For the cash collection, so 50-50. So 50% of 56,000 is 28,000. So mora na collection na to for April, 28 and 12. For May is the other 50% from the April sales or the April purchases, 50% of 88,600. So that's for the month of May. So a total of 72,300. For June is the other 50% of the purchases from May. And lastly is the 50% of the June purchases. So 56,800 times 50% is 28,400. Okay, so calculate the total. So total cash disbursement for materials is 185,000. Okay, so what is the total cash disbursements for the quarter? So the answer is letter A. So after preparing the direct materials budget, we can now proceed to direct labor. So assumptions for direct labor are the following. So at Royal, each unit of product requires zero point zero 0.05 hours or 3 minutes of direct labor. The company has no layoff policy, so all employees will be paid for 40 hours of week work each week. So for the entire quarter, so you are not expecting to lay off employees. So for purposes of our illustration, so workers are paid at the rate of $10 per hour, regardless of the hours worked. For the next 3 months, so for the next 3 months, the direct labor workforce will be paid a minimum of 1,500 hours. So guaranteed na siya. So regardless kung pila ka hours ra ilang di render in the production, but they are guaranteed a minimum of 1,500 hours. Okay. So let's have the direct labor budget. So units of production, so based on the production budget, so for April it's 26, for May is 46, and June is 29. So how many minutes or direct labor per unit are we going to use or require? So for each unit, so you will only need 3 minutes. Okay, so 3 minutes or zero point zero 0.05 of 60 minutes or zero point zero 0.05 of an hour. So I multiply. So for April, you will need 1,300 hours to produce 26,000 units. For May, it's 2,300. And for June is 1,450. So the total labor hours required to produce all those units, all the 101,000 units, is 5,050 hours. Now, there's a policy of the company that they will guaranteed a minimum of 1,500 hours. So maski pag ubos ang ilang gigamit niya hours to produce the production, but since it's in the policy that they are paid a minimum of 1,500 hours, so the guaranteed for April is 1,500 and all the succeeding months. For the labor hours paid, so we will use of course, the higher between the labor hours required and the guaranteed labor hours. So for May, so it's guaranteed that they will paid 1,500 hours for May. So higher ang labor hours required. So they are paid 2,300 hours. And for June, that's 1,500. So total labor hours paid is 5,300 multiplied by the hourly wage rate of $10. So total of 53,000. So 15,000 for April, 23,000 for May, and 15,000 for June. Okay, so question, what will be the total direct labor cost for the quarter if the company allows follow its no layoff policy but pays $15 for every hour worked in excess of 1,500 hours. So we call this the overtime pay. Okay, so when we compute the direct labor budget, we only use $10, but in actual, the company usually pays higher premiums in their overtime. So instead of $10, so they will pay $15 for the excess or the overtime hours. Okay, so the regular hours is 1,500 per month. So in the quarter, you have 1,500. For April, there's no excess hours or overtime. However, for May, so we have 2,300 hours, labor hours required. So the excess is 800. So for 4,500, so that's $10 each. So you have 45,000. While the overtime hours is 800 multiplied by $15. So 12,000. So you will have a total pay of 57,000. Okay. Next would be the manufacturing overhead. Okay, so to create the manufacturing overhead, so ato ning timan-an. Okay, so these are the assumption for the manufacturing overhead. So the manufacturing overhead is applied to units of product. So take note on the basis of direct labor hours. So especially pag labor intensive ang company or manufacturing. So it is used, the direct labor hours is applied. So the variable manufacturing overhead. So by the way, the manufacturing overhead is divided into two. So you have the variable and the fixed. So variable manufacturing overhead rate is $20 per direct labor hour, while the fixed for each month is 50,000, which includes depreciation of 20,000. So this is a non-cash item. So let's prepare for the manufacturing overhead budget. So based on the direct labor hours, the units, 2,300 for May, and for June, it's 1,500. Now the 1,500 is only used as a basis to how much to pay for the workers. But in actual, so in preparing the manufacturing overhead budget, we based on we based it on the direct labor hours required to produce the number of units. So according to the assumption, it's $20 uh, per direct labor hour. So multiply na siya sa budget.dlh. So you have 26, 46, and 29 plus the fixed cost of 50 each month. So the total manufacturing for April is 76, May is 96, and June is 79. However, to determine the cash disbursements for manufacturing overhead, so we do not include the depreciation because it's a non-cash item. So to know the cash disbursements for manufacturing the overhead, so for April it's only 56, May is 76, and 59 for June. For the entire quarter, so the total cash disbursements is 191,000. Okay, so going back to the slides.
Ang baw eh.
Kailang matausan no kasi bagot-bok no.
Mm.
Pero sige lagi bagot-bok. Ano? Ha? Dito balay? Oo.
Okay,
Sige kay
so
saba.
kindly mute
Ahadlok
sana.
anak ng kuan ma mubakod siya makalit ra mga bray nagportahan.
Mutindog ba din sa iba?
All right. So to get the standard manufacturing overhead rate, so we know the total manufacturing cost or manufacturing overhead cost is 251,000. So to get the per unit or per hour of manufacturing overhead, so divide it by the 5,050 labor hours required. So you have 49.70 per hour. So kung mag-prepare o job order or process cost order, so we know the direct materials. Why, by the way, this is the ending finished goods inventory. So direct materials, so per unit is 0.45 pounds per times 0.40 is $2. For direct labor, so to produce one unit, you need 0.05 hours and the cost is 10. So you have 0.50. And lastly is for the manufacturing overhead. So sa atong na-compute gaina, it's 49.70 multiplied by 0.05 hours. So you have 2.49 to produce one unit. So the total manufacturing cost per unit is around 4.99. So the ending finished goods is 5,000. So based on the production units, so ang 5,000 i-multiply na siya sa 4.99. So nana ending inventory sa production budget for the quarter. So our ending finished goods is 24,950. So we're done with the manufacturing budgets. So we can now proceed to the selling and administrative expense budget. So these are the following assumptions. So same with the manufacturing cost, the selling and administrative is also divided into variable and fixed. And ang kalainan sa variable sa selling and administrative expense, ga-based ni sila sa units sold, while the overhead budget is, I mean, the manufacturing budgets are based on the production. So variable and selling and administrative expense are $0.50 per unit sold, while the fixed is $70,000 per month. However, the 70,000 includes 10,000 in depreciation cost, which is not a cash item. Okay, so selling and administrative budget. So gibase na nato sa kanings budgeted sales, of course, tana siya sa sales budget. So 20, 50, and 30. Then the variable rate is 0.50 per budgeted sales units. So 10, 25, and 15 plus the fixed cost of 70. So the total selling and administrative expense is 80 for April, 95 for May, and 85 for June. But to determine the cash selling and administrative expense, so you have to deduct the 10,000 depreciation. So total cash selling and administrative expense for April, that's 70. For May, it's 85. For June is 75. And for the entire quarter, so you have 230,000. So question, what are the total cash disbursements for the entire quarter? So for selling and administrative expense. So our answer is 230,000. Okay, so that's the last amount in our Excel. So we're done with the sales, production, manufacturing budgets, and selling and administrative expense. Now we can prepare the cash budget. So importante nga maka-prepare tag cash budgets because it will determine whether we have enough cash to produce the units, the forecasted units, or perhaps we need to borrow or source our financing outside. So here are the following uh, before the assumption. So the cash budget is divided into four sections. First is called the cash receipts. So all the cash inflows for the operations. So way labot ang mga cash received from borrowing or financing. So solely for the operations or cash collections from customers. Cash disbursement, so it consists of all cash payments but does not include the repayments of the principal and interest. So it's operation related ragyod ang cash disbursements. Cash excess or deficiency section determines if the company will need to borrow money. So kung na deficiency, then that's the time that we need to borrow money. And also to determine which month can we repay. Financing section details the borrowings and repayments projected to take place during the budget period. Okay, assumptions. So maintains a 16% open line of credit for 75,000. So open line of credit meaning anytime the company can borrow money up to 75,000 only. And it has an annual interest of 16%. So aside from that, the company also need to maintain a cash balance of 30,000. And usually they borrow money on the first day of the month and repay it usually not last day of the month but last day of the quarter in this case. So in April, they also paid a cash dividend of 49,000, and then they were able to purchase 143,700 of equipment in May and 48,300 in June. So all of them are paid in cash. So April 1 has a beginning cash balance of $40,000. Okay, so we have this assumption. Okay, so going back to our budget. So you have the cash budget. So cash collection. So in April, we have a beginning cash balance of 40,000. Cash collection, so gayon sa pagkuha ang cash collections, ikuha na siya sa sales budget. So remember the schedule of cash collections in the sales budget. So 170, 400, and 335. Then for the entire quarter is 905. So that's where we get the cash collections. So total cash available for April is around 210,000. Then we have the cash disbursements for the following items. So that's why we computed for the cash disbursements for materials, direct labor, manufacturing overhead, and so on. So of course, some materials, so we get that from the direct materials budget. So total cash disbursement. And for the direct labor, so of course, we base it on the total direct labor cost. For manufacturing overhead, so that's the cash disbursements for manufacturing overhead. Selling and administrative, so that's the cash expenses. So muna siyang items nga naa diri, from materials to selling and administrative expense. So we get that from the different budgets, cash disbursements for the different budgets. Now, aside from this, so we have determined that they have purchases. So in April, they have purchased 143,700 of equipment, and for June, it's 48,300. They also paid cash dividend in April, 49,000. So for April, the total cash disbursement is 230. For May is 400. And lastly is 270,000. So to determine the cash, the excess or deficiency, so there is an excess if the cash available is higher than the cash disbursement. Otherwise, if the total disbursement is higher than the total cash available, then it's called deficiency. So in April, we have a deficiency of 20,000. For May, that's the excess is 30,000, while for June, that's 95,000. So since we have deficiency in April and we need to maintain a cash balance of 30,000 at the end of the month, so you need to borrow 50,000. Okay, so 50,000 minus the deficiency, so your ending cash balance for April is 30,000. So mo ni siya ang atong gihimo nga beginning for May. So the ending cash balance for April would be the beginning balance for May. So total cash available for 30, the cash disbursement is 400,000. So 30,000 ang nabilin. So we cannot pay our loans and interest because the management needs to have an ending cash balance of 30,000. So we only have an exact amount 30,000. Okay, so 30,000. So we cannot pay yet our uh, borrowed money. So that's the ending balance for May. So it will become the beginning balance for June. So total cash available for June is 365,000. So you have a total cash disbursement of 270,000. So kung imo nang i-total tanan, so your excess is 95,000. So we have enough money to pay our borrowed money, the principal, including the interest. So yun sa pagkuha ang interest, so remember that we have an annual interest of 16%, but the period is only for 3 months ang nilabay. So, multiplied 16% sa 3 over 12, or that's 20.25 of the entire year, and then 50,000. So, you have an interest of 2,000, which will be paid this quarter. So, your total financing is 52,000. So, that's an outflow. So, you have an excess of 95,000. So, your ending cash balance for April is 43,000. So take note that the ending balance of the quarter would also be should be also be the ending balance. The ending balance for June should be the ending balance for the entire quarter. So cash. So get the total of each. So ending cash balance for the entire quarter is 43,000. Okay, so question. What is the excess or deficiency of cash available over disbursements for June? So answer is 95,000. So there is no deficiency, but we have an excess of 95,000. That's for the month of June. Okay, so interest. So that's how we compute the interest. Okay, so now after preparing the cash budget, so we can prepare the budgeted income statement. So with interest expense from the cash budget, Royal can prepare now the income statement. Okay, so for the quarter ended June 30, so we know the sales for the entire quarter is 101 million. Now, giyon sa pagkuha ang cost of goods sold niya, 499,000. So it's basically 1 million times the manufacturing cost nga ato na compute gaina, which is 4.99, diba? So we have the direct materials cost per unit, the direct labor, and then the overhead. So if you can recall how we compute, that's 4.99 ang cost per unit nga ibaligya. So 1 million sales times of um, or let's say 100,000 units nga sales from the sales budget multiplied by 4.99. So that's cost of goods sold is 499,000. So your gross profit or gross margin is 501, less the selling and administrative expense. So the total selling and administrative expense for the entire quarter is 260,000. So your operating income is 241,000, less the interest expense of 2,000. So you should get a total net income of 239,000. Okay. The sales budget, ending finished goods. So that's 4.99 ang ending, but the sold is 100,000 units. Okay, so last budget, in preparing the master budget is the budgeted balance sheet. So what are the assumptions under this budgeted balance sheet? So aside from those items, so we have the following. So they have a land worth 50,000. The common stock is 200,000. The beginning balance of the retained earnings before the April is 146,150. They have a previous equipment of 175,000. So before pa ni sa mga purchases sa May o June, right? So let's go back to our budgeted balance, our Excel. So that's for the entire quarter. So as of June 30. So ang cash balance gikuha na nato sa cash budget. So our ending is 43,000. Now the accounts receivable, yun sa pagkuha ang accounts receivable, that is based on your schedule of cash collections. So same from sales. So you are, diba sa June we are only collecting 70% of 300,000. So we have collectibles in June for the 25% of um, the 300,000, which will be collected the next month. So 25% times 300,000. So that's why we have 75,000. Okay. So that's 300,000 times 0.25. So the cash collection percentage. For raw materials inventory, so that's uh, from the direct materials. So that's the ending inventory. So 40%. So that's 40% of the ending inventory of um, okay, 40 cents man per raw materials. So multiply that by the ending inventory nga 11,500. So that's why we have 4,600. For finished goods, so we have already computed this. So katong 4.99 times 5,000 units. Then for land, so it's given, land 50,000. Now for the equipment, so they have a beginning balance of 175,000, but at the same time we have additional purchases of 143 and 48. So a total of 192,000 this quarter plus 175,000 the previous quarter. The beginning balance kumbaga sa equipment purchase plus the current purchases. So you have a total 367,000. So total assets would be 564,550. Common stock, it's given. Accounts payable, so we get it from the production. No, I don't know. Direct materials rather. So take note in June we have 50%, 'di ba? We are paying it in June 28,400. while on July, the other 50% would be paid. So napatay bayro nun nga 50% sa 56,800, which is 28,400. So muna ato ang accounts payable. For retained earnings, so pagkuha sa retained earnings, that's beginning balance of the retained earnings before this quarter plus the net income this year. So net income na to this year is 239,000 deducted, i-deduct na to ang dividend nga 49,000. So beginning balance of retained earnings 146,150 plus net income this year of 239,000 minus cash dividend of 49,000. So you have retained earnings of 336,150. Total liabilities and shareholders 564,550. So further explanation. For retained earnings, okay. So we're done with the master budget. So we begin creating the budget. So sa sales, the next would is the production budget down to the three different manufacturing budgets, materials, labor, and over manufacturing overhead. So we also have the selling and administrative expense, then cash budget, then created the budgeted income and balance sheet. And we also determine the importance of the budget, the ideal budgeting process, and also its advantages and disadvantages, and how to mitigate these disadvantages. Okay, so okay, that's also. Please, if you have questions, clarifications, so you can now ask them.